Assalamualaikum warahmatullahi wabarakatuh. My name is Adam Hafiz bin Muhammad Fuad. I want to explain the introduction to Islamic banking system. Islamic banking in Malaysia began in September 1963 when Perbadanan Wang Simpanan Pakar Bakal Haji (PWSBH) was established. PWSBH was set up as an institution for Muslims to save for their Hajj pilgrimage to Mecca expenses. In 1969, PWSBH merged with Pejabat Urusan Haji to form Lembaga Urusan dan Tabung Haji, now known as Lembaga Tabung Haji. Apart from banks, other than banks intermediaries offering Sharia-based products are Malaysia Building Society Berhad (MBSB) and cooperative registered under the Cooperative Commission of Malaysia (HKM). In Malaysia, the National Sharia Advisory Council additionally set up at Bank Negara Malaysia (BNM) advises BNM on the Sharia aspects of the operation of this institution as well as on their products and services. In 2006, BNM set up International Center for Education in Islamic Finance (INSIF), a dedicated university to provide skilled and certified personnel for Islamic finance in Malaysia. The university was established as part of the Malaysian government initiative to further strengthen the country's position as an international Islamic finance center. It is the only university in the world that is wholly dedicated to postgraduate study in Islamic finance.
My name is Abdurrahman bin Baharuddin. The historical background of Islamic finance. Before year 1950, minority community of Muslims in southern India established interest-free loans in 1890. Interest-free credit society was established in Hyderabad, India in 1923. For year 1970, Nasser Social Bank was established in Egypt in 1971 and being the first state sponsorship of interest-free institution. The first Islamic commercial bank, Dubai Islamic Bank of UAE, opens in 1975. Islamic Development Bank was established in 1975 with the objective of promoting economic development in Muslim countries as well as offering development finance according to the rules of Sharia. During 1980, Islamic Development Bank established the Islamic Research and Training Institute in 1981. Islamization of economies in Islam Republics of Iran, Pakistan and Sudan, where banking systems are converted into interest-free banking system. Countries like Bahrain and Malaysia promote Islamic banking parallel to the line conventional banking system. In year 1990, Takaful, Accounting and Auditing Organization for Islamic Financial Institutions are established. During 2000 until now, Islamic Financial Service Board was established to deal with the regulatory and supervisory and corporate government issue of the Islamic regulatory relating to Islamic financial service industry. Islamic bonds are also launched. Islamic finance in Malaysia. In year 1970 to 1980, Islamic banking and Islamic windows were established in Malaysia. After that, Takaful institution was established in during 1980 to 1990. The emergence of Islamic capital market instruments occurred in 1990 to 2000. Islamic finance in Malaysia has four phases. For phase 1, establishment of Islamic financial institutions such as Tabung Haji, Bank Islam and Syarikat Takaful Malaysia Berhad. In phase 2, conventional banks were allowed to offer Islamic financial products and services under Islamic banking scheme. Phase 3, conventional banks are allowed to set up Islamic subsidiaries such as interest-free banking scheme. And for phase 4, international integration of the domestic Islamic banking system such as Kuwait Finance House, Al-Raji and ASEAN Finance Bank.
My name is Muhammad Ifan bin Izzat. Okay, next is the growth of Islamic banking system. Growth of Islamic banking system have following outcome, such as number 1, economic growth. Economic growth is an increase in the production of goods and services in the economy that has been measured by the GDP, gross domestic product. And number 2 is Islamic banking system provide financial product based on the risk sharing and profit sharing. Number 3, Islamic banking system also provide acceptable financial return for investor. It also refers to the type of investment that are permissible under the Islamic law. And then Islamic finance can be seen as a unique form of socially responsible investment. And the last one is Islamic bank are most active in the trade, commodity finance and leasing. This is because Islamic finance demand the avoidance of the riba and darar.
Laws Governance of Islamic Banking. Islamic Financial Services Act 2013. After 3 decades of Islamic finance development, Malaysia attempted to further strengthen the Sharia governance and Sharia compliance commitment of the Islamic financial service industry by legislating the Islamic Financial Services Act 2013. The Act represents the legal framework of Islamic financial institutions in Malaysia, in particular aspect of Sharia compliance. Islamic Financial Services Act 2013 emphasized a total Sharia compliance effort of the Islamic finance industry through 4 dimensions, namely Sharia governance framework, Sharia standard for each contract used in Islamic financial transaction, preemptive measures to address issues of concern within Islamic financial institutions that may affect the interests of depositors and policyholders, and the last, the effective and efficient functioning of Islamic financial intermediation. The role of Islamic Financial Services Act 2013. Its main objectives are to promote financial stability and compliance to Sharia, and further strengthen the regulation of Islamic financial institutions. The importance of Islamic Financial Services Act 2013. It is provide for the regulation and supervision of Islamic financial institutions, payment system, and other related entities, and the supervision of the Islamic money market and also Islamic foreign exchange, and to promote financial stability and compliance with Sharia. Islamic Finance Services Act 2013 and Sharia compliance requirement. In Section 28(1) of IFSA 2013 states that one of the duties of Islamic financial institution is to ensure that its aim and operation, business affairs and activities are in compliance with Sharia. The meaning of Sharia compliance is explained in Section 28(2) as follows. It stated that compliance with any ruling of the Sharia Advisory Council in respect of any particular aim and operation, business affair, or activity shall be deemed to be a compliance with Sharia in respect of that aims and operation, business affair, or activity. Therefore, all Islamic finance institutions should comply with Sharia by complying with the ruling of the Sharia Advisory Council of BNM and its Sharia standards, and then ensuring internal policies and procedures are consistent with Sharia requirements. And the last one is developing a Sharia audit functions. To ensure that Islamic finance institutions are able to conduct financial intermediation functions by using various Sharia contracts in a Sharia compliant manner, Islamic Finance Services Act 2013 requires Sharia Advisory Council of BNM to develop Sharia standards that explicate fundamental requirements of the respective Sharia contract to be used in product development. This is the structure of Islamic Financial Services Act 2013. It consists of active parts containing 291 sections and 60 schedules, including no amendment, from preliminary, regulatory objective, authorization, Sharia requirement, payment system, prudential requirements, ownership, control and transfer of business, financial groups, business conduct and consumer protection, Islamic money market and Islamic foreign exchange market, submission of document information, examination, direction of compliance, intervention and remedial action, other powers of bank, enforcement and penalties, general provision, and the last one, repeal, savings and transitional schedules.
My name is Muhammad Khairul Ikhwan bin Faisal. Now I will continue with differences between Islamic finance and conventional finance. There are many differences between Islamic finance and conventional finance. Now let's take a look. Firstly, sources and principle. Sources and principle of Islamic finance is based on the principle of Islamic Sharia. Besides, for conventional finance, it is
based on fully man-made principles. Next, prohibited elements. For Islamic finance, it is free from elements of riba, maisir, and gharar. On the other side, for conventional finance, the transaction involve elements of riba, maisir, and gharar. Next, moral dimension. For Islamic finance, it works within the moral values of Islam, and for Islamic finance, they cannot they cannot finance any projects which conflicts with the moral value of Islam. On the other side, for conventional finance, they're not concerned about moral implication of the activity they finance. For example, uh, the activity which related to uh, gambling and alcohol. Next, the objectives. Objective of Islamic finance is to mobilize resources to develop the society, and the profit is not the sole objective for Islamic finance. On the other side, conventional finance attract resources and lend them to gain profit, which is profit maximization. Last but not least, auditing and supervision. For Islamic finance, the transactions was reviewed by certified auditors and religious supervisory board. Besides, for conventional finance, it is only the transactions only reviewed by certified auditors.
Okay, next we continue with the major challenges faced by Islamic banking system. Okay, for the first challenge, Islamic banking system relates to the building the capacity to manage the increasing uncertainty that are generated by the financial innovation. Number two, the increasing prominence of non-regulated sector, and the last one is the increasing of the interconnectedness between financial institution and market. It also changed the dynamic on how risks in the financial system that are transmitted into the real economy. Okay, for the second challenges, Islamic banking system concern the effective implementation and coordination of the different components of the safety to maintain public confidence and to support continuous financial intermediation. This is because appropriate regulation and regulations that are ensure credibility and integrity of the safety are essential part or important part of maintaining financial stability. Okay, for the third challenge, Islamic banking system relates to the increasingly and highly complex financial and economic integration associated with the globalization. This has resulted in a significant expansion in cross-border financial activities and introduced new source of risk to domestic financial system. Okay, for the fourth challenge, Islamic banking system related to the accounting and auditing standard. The Accounting and Auditing Organization for Islamic Financial Institutions has made an important regulatory beginnings. This is because it seeks to support the faith of Islam by developing accounting standard for Islamic investment vehicle and conducting the training and publicity.
To conclude our presentation, the Islamic banking and finance in Malaysia started with single Islamic bank in 1983 to become one of the most progressive and innovative in providing Islamic banking services and products. The development of human capital is seen and essential for Malaysia's Islamic financial system to remain competitive and producing more innovative Islamic financial products. Department of Statistics Malaysia (DOSM) from time to time will evaluate the methodology used in compiling the value added in Islamic banking and Islamic capital market. The DOSM will continue working together with the financial system regulators such as BNM, Bursa Malaysia, SC, and Labuan FSA to refine the value added compilation of Islamic banking and capital market activities. Moving forward, a universal guideline is needed to make the estimate of Islamic finance more comparable among countries. That's all from us. Thank you. Assalamualaikum.